I'm Yahoo Finance Executive Editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this Thursday morning. Waterbridge Infrastructure ringing the bell at the New York Stock Exchange. Netscope getting things popping over the NASDAQ on its IPO day. Well, friends, Mr. Market got the pound of flesh he wanted Wednesday in the form of a rate cut from the Jerome Powell Federal Reserve. But Powell clearly stuffed that pound of flesh with an injection of Pepto by signaling the rate was cut. The rate cut was nothing more than an insurance cut. It was Powell's way of reminding the markets that rate cuts are not on a preset course, so don't expect 6 more cuts between October, December, and the front half of next year. The end byproduct here, a market right now in search of some next big catalyst. Give them something fresh. Let's check in on the markets now. Post-Fed decision day, Yahoo Finance senior reporter Ali Canal standing by at the NASDAQ for us. Ali.
Hi, Brian. Yeah, so I'm taking a look at stocks. It seems like we have opened in the green at this point. And we have the NASDAQ up around 0.8%. Obviously, that comes after that huge deal between NVIDIA and Intel helping to boost shares. You're seeing the Dow trading slightly to the downside there, pretty much flat, and the S&P up roughly 0.4%. I mentioned that NVIDIA Intel deal. That is something that investors will continuously be eyeing throughout the course of the trading day. NVIDIA putting $5 billion into Intel, grabbing a 4% stake, teaming up with the company to build new AI data centers, CPUs and PC chips with built-in RTX graphics. So very important move for Intel. You're seeing shares up 25%. AMD is down around 5%, so also a reaction to this NVIDIA deal. And that is overshadowing a bit some of the news that we got yesterday with the Fed delivering its first rate cut of the year. We did see a reaction in various areas of the market. For example, the US dollar index did catch a bit of a bid, bouncing off those 3.5-year lows. We are still trading under that psychological 100 level, so the dollar still struggling. That also had an impact on gold, with gold futures coming off of those record highs just a bit, maybe traders booking some of that profit. And it's all risk on for Bitcoin. We are now above $117,000 a coin. Strategists are eyeing 118 to 120,000 as the next key technical level here, Brian.
Ali, when that Intel news, NVIDIA news hit this morning, I got up out of my desk. I was WTF, except I spelled it out. I mean, it's just, It's just shocking. I mean, NVIDIA is essentially eating up Intel. I mean, I can't believe it. All right, Ali Canal, appreciate it. All right, here's what I'm tracking out of the gate today. Well, Fed and looking for what's next. Markets got their rate cut served up at the side of measured Fed Chair Jerome Powell on the path of rates. What markets probably didn't expect to hear was how much of a downer Powell was on the labor market. So what's the most ideal trades to be making right now? The opening bid roundtable will fire them up for you. Give a competitor $5 billion. Ailing Intel gets its second most important investor after the U.S. government today, securing a $5 billion investment from AI chip king NVIDIA. The two will also work closely on chip production and development. This, the latest saga at Intel this year, which has included thousands of layoffs, terrible financial results, and a crop of new high-profile investors stepping in to save the company from ruin. During a press conference with UK Prime Minister Keir Starmer today, President Trump telling NVIDIA CEO Jensen Huang, who was in the audience, quote, "You are taking over the world, Jensen," and it sure seems like that. And Meta ratchets up the pressure to end Apple's iPhone dominance. Meta unveiled a host of new hardware at its Connect event, one of them being a pair of eyeglasses that are overlaid with AI. So can Meta overtake Apple? How can even OpenAI and Jony Ive take on Apple? We'll discuss with our roundtable, and they are here right now. Ben Amons, FedWatch Advisors founder and chief investment officer. Art Hogan, B. Riley Wealth chief market strategist, and Yahoo Finance senior reporter Ali Canal. I'm going to stay on the Fed. I want to talk about this NVIDIA news, but I have to get on the Fed bed. Ben, I want to get over to you here. If you are a bull on this market and you have been a big believer and the Fed's going to come out here and chop interest rates over the next 6 to 8 months, did you get enough from Jerome Powell's press conference yesterday to satisfy your needs for higher stock prices?
I did actually, Brian, because although I actually had to call that they may go for 50, what they really did, though, was for the reason I thought they would go for 50, which is making sure that the unemployment rate doesn't go higher than 4.5%. So they drew a line there. And if you do that, then you're giving this market a comfort. And I think that's just how markets are trading this morning. You know, the cut in October or December can always be data dependent, but it seems, though, that through their guidance that is a relatively sure bet. And that makes you comfortable. And I think this is why we're having a good start of the day today. And you're seeing this risk-on move. And I think this is exactly what the Fed delivered yesterday. And I think it will go along with this. It's a risk-on rally.
All right, I think a lot of folks, not you, not Ben, not Ali, not me, but I think fell asleep towards the end of that Powell presser yesterday. He was asked about the stock market. And Powell did say he didn't think valuations were overheated. Not his exact words, but that's what I read into his comments.
Yeah, I certainly didn't say they were irrationally exuberant. We haven't heard that since '96. No. But I would tell you this. I think the key takeaway from yesterday's Fed meeting, while everything that happened was largely expected, was that there was only one dissenter, and that's the new kid on the block who's also interviewing for the chair job. So that doesn't catch us by surprise. I think the fact that Powell still has consensus cements the fact that they're independent, and I think that's very important. And I think that they're pretty clear in the summary of economic projections that they're willing to continue to cut rates and focus more on their full employment mandate than they are on the near-term core goods inflation that's driven by tariffs.
Ali, I didn't like anything Powell had to say on the labor market. You have to think these next few non-farm payroll reports could be pretty ugly.
Yeah, they could be critical. And I've been speaking to a lot of economists, too, that say we might be in a position where we consistently have payroll growth under 100,000. And part of that reason is the immigration crackdowns that we've been seeing. So there's a supply and demand issue there, too. Now, some of the economists that I spoke with said even if we have, 20 to 50,000 payrolls a month, you could still have a healthy economy. But the dynamics are certainly changing. And I think that's something that Powell really alluded to. We're in a very unusual economy. We have inflation still sticky. We have tariffs continuing to make their way through the system. We do have weakness in the labor market, but the labor market is not at a point where it's falling off a cliff. So how do you balance those risks? And that is really where the Fed has to come in and make these policy adjustments. But it did seem like he's totally unsure where the future will lead when it comes to the economy and the future of interest rates, even though we got that cut, even though the SEP projected dot plots that were maybe a little bit more dovish than we saw in June, his commentary was a bit more hawkish than I think some investors thought heading into this meeting. So it'll be interesting to kind of continue to see what the data shows us and how the Fed responds.
Art, how unsure are you on where to go in terms of sectors and stocks from here?
Well, I can tell you this. Since the really soft July jobs report, the sectors that are interest rate sensitive have already started to outperform. I think they continue into the end of the year and into next. So you think about the financials, clearly interest rate sensitive, the small caps, whether it's the Russell 2 or the S&P 600, or the home builders, they're starting to get a bid for the first time in 3 years. And you can buy the ETF, which is the XHB, or you can barbell an approach and buy Toll Brothers for the high end and D.R. Horton for the low end. Even as important as that is the housing adjacent names that are interest rate sensitive. So think about Home Depot and Lowe's and Wayfair and Rocket Mortgage and Open Door. All ways to play that what likely is going to be the start of the defrosting of this ice age in housing that we've seen since the pandemic, and likely this is the first step in that direction. We've seen the 30-year fix come down. We've seen mortgage applications pick up, and I think that's going to continue throughout the end of the year and into next.
Ben, I'm liking some of those names that Art just mentioned. Is the reality that we're going to get 2 more rate cuts before the end of the year? We might get a couple in the front half of next year, and by the middle of 2026, this is an economy that is absolutely humming along?
That's what they're aiming for, Brian. I think that we're already in that sort of stage of let's say the first start of a re-acceleration. And so we got to watch the PMI data and ISM data particularly, because that's all outlook data. And that means that they're very sensitive to interest rates. And probably the outlook is going to improve in those surveys, and that's going to affect against sentiment and then lead to activity. And I think that that's why that forecast they put out, there's a bullish forecast, I would think, probably gets materialized, at least to a large extent, bearing any kind of exogenous shock. So you anticipated a rate cut, now you implement them. Yeah, you're giving the economy a boost here.
Ali, I've been doing this for a hot minute, and if you would have asked me 15 years ago that I would have thought some company named NVIDIA would be giving $5 billion to this iconic company called Intel, I would have thought, you're crazy. This is just shocking news, and you made a good point at the start of the show. Shares of AMD are down. If you're CEO at AMD, Lisa Su, you hate this news between NVIDIA and Intel. Absolutely hate it.
Right, and it's going to be interesting to see how this plays out across the chip landscape, because Intel had really been the forgotten stepchild here in the AI race. And now, after years of being behind, they have the backing of CEO Jensen Huang, who, as President Trump said, as you alluded to, Brian, he's taking over the world when it comes to AI. And for NVIDIA, this gives it optionality, right? Teaming with Intel allows NVIDIA to push back on AMD for PCs, compete with Apple's all-in-one chips. That's what analysts on the street have been talking about. And that's part of the reason why we're seeing those AMD shares struggle a bit this morning, because they're the odd one out. Investors are going to worry that AMD will lose share in both PCs and data centers here. So I think zooming out, big picture here, NVIDIA really is just cementing its dominance. Intel is getting the much-needed boost that it needs, and all of a sudden, AMD looks a bit squeezed.
Art, why would one own any other chip name tied to AI than NVIDIA? I don't get it. Not only has Jensen warmed up to the Trump administration, he's getting Intel shares at a seemingly low price, under $24. That'll boost the value of his company. He's getting a tie-up with Intel to make chips. Why own another name? It would make no sense.
Not to mention, he's probably currying some favor with the U.S. government.
Right.
Moved them closer to getting a license to sell into China on the H20 chips that they're sitting on about $15 billion worth. I would argue that the new name in the space has been Broadcom, and I think there's application for more than just NVIDIA. But NVIDIA, clearly the leader here, cementing that leadership. And $5 billion to NVIDIA, they probably found that in the couch of the headquarters waiting room. So, to the extent
Jensen's couch, Art. Jensen's couch.
Exactly. Yes. It's not a massive investment for them, but it's a massive plus for Intel. Now, what's not going to happen is they have to get regulatory approval, which looks likely, but they're not going to produce the high-end chips at the Intel fabrication just yet, but it's also going to get that fabrication up and going and bring the PC into NVIDIA, something they didn't have in their stack.
Ben, every day, seemingly, I'm on the show talking about new investments in the U.S. in terms of chip manufacturing. When does this all show up in the economic data? These are big companies spending billions of dollars to make chips in the United States. When will I be able to find this tangibly in GDP?
Actually, it already is, Brian, because, in the past with the chip grants, there was already investment happening. So it's now being accelerated by these efforts like Intel, which I think really what's going on there is that NVIDIA is really to become the TSMC for the US, right? It's like you want to have our own chips here and dominate that. And that just leads to ancillary investments that you're seeing in data centers. And now you're seeing it through companies like Eli Lilly making their investments, or Ford and other companies, which, by the way, is going to hit this quarter in the data. It seems to be cumulative about 30 billion of investments, tangible investments making in this quarter. So it's impacting it. And the durable goods data next week, for example, probably will show that these components of electronics and capital goods are rising year on year, really because of investment activity.
Last word to you, Art. I promised you, I got your X. I put a repost on it that we would talk briefly about Meta, what it unveiled, and as it pertains to Apple. Am I out of my mind to think that Apple could be challenged by what Meta put out or wants to put out in eyeglasses? And if I am out of my mind, you can certainly tell me. We'll still have you back.
Well, I'd have to ask you first if you have a set of the Meta Ray-Bans now and if you're using them. And if that's the way you imagine consuming content and consuming artificial intelligence, I suspect that Apple still has the upper hand with over 2 billion installed units across the world. And all of us will likely go to Apple first to consume our artificial intelligence. The ability for them to give it to us has just got better when the Google suit got thrown out, so I think they're going to partner with somebody pretty good, and I think Apple's probably going to be the preferred delivery device, even though those Ray-Bans are pretty cool.
I look at all this stuff, guys, and it's just another thing for me to plug into my wall that I have to do it every single day. That runs up my electric bill, but I guess such is life. Thank you to my opening bid roundtable, Ben Amons, Art Hogan, and Alec Canal. Appreciate it. Straight ahead, Gary Cohn makes his return to opening bid. I always enjoy catching up with Gary, especially the day after a Fed meeting and with stocks near record highs, and I guess also in light of this NVIDIA Intel news. We'll be right back with Gary. All right, the market finds itself at an interesting crossroads. Stocks are at records, and it looks like more rate cuts are in the cards after the one delivered on Wednesday by the Fed. But the economy has slowed, and CEOs are still cautious on the future of policy by the Trump administration. Let's talk more on all this in our Power Players segment with the former director of the National Economic Council during President Trump's first term, Gary Cohn. Gary is also a vice chairman at IBM, a tech giant that has seen its stock rise about 18% this year. Gary, it's good to see that stock go from left to right, right?
It's always good to see it going up. Up is a good thing, right?
Up is a good thing. So your sense of what Jerome Powell said yesterday on the economy?
Yeah. Look, I think yesterday was a very interesting day. The chair admitted he's got a problem. He's in a conundrum. He's got a two-factor model. Factor number one is stable prices, which is basically a goal of 2% inflation. He's not achieving that. He's higher than 2% inflation. On the other hand, he's got a factor two, which is full employment. He sees very clearly that the employment market is softening. The data has come in very soft. You know, we're seeing 50,000, 25,000 new jobs created each month. So the chairman's sitting there going, look, I'm trying to balance these two parts of the equation. Which one matters to me more today, knowing that if I fix one, I may affect the other. And he sort of admitted that yesterday. So he pivoted yesterday and said, I'm going to deal with the employment problem in the United States. We're going to cut interest rates by 25 basis points. We're going to sort of dip our toe in the water. He actually called it a risk management exercise.
It's clever. That's what stuck that in there. Yeah.
Risk management exercise. We're going to cut 25 basis points, and we're going to see if we can help job growth in this country, knowing that cutting interest rates is stimulative to the inflationary side of the economy. So he's in there admitting he's got this problem, he's got this conundrum. You know, his committee as a whole, you know, he's got a committee that votes as a whole, really had a pretty interesting divergence of where they think interest rates are going and where they are. You know, you literally had one person on the committee that, even though it seems like they voted for this cut, in their projection of where they think interest rates would be, they did not have this cut in their projection. Then you had 6 more that said, we don't need any more cuts for the rest of the year. Then you had 9 that said, we need 2 cuts for the rest of the year. Yeah. So even just looking out between now and year end, the chair's got to balance a committee that understands they're trying to deal with this two-factor model. You know, it does look like we have started a rate cutting path, but it seems like it's going to be a slow, methodical path, and it's not a guaranteed path. So, you know, if you look at where the dots plot out to the year end, it's about 3.6%, which is about 2 2/3 of a cut. So it looks like one more is baked in for sure, and maybe 2.
Every time the Fed chair mentioned the labor market, I'm like, wow, I mean, the jobs market's going to stink, and it's going to get worse. But does that reinforce the point we've heard from President Trump that this is too late, Jay?
You know, I don't know if it's too late, Jay. The job market has clearly been softening over the last few months. On the other hand, the inflation numbers have not come down as fast as the chair would want. Now they've come down, but they're still stuck, core's still stuck around 3%, 2.9%, and his target is to get it to 2%. So look, you can criticize any part of this whole equation you want. You can criticize that the chair is late because the job market has gotten soft. You could criticize because he's being too aggressive because inflation's too high. Like I said, it's a two-factor model he's trying to balance out.
You will not hear Powell say this, but did he bend to pressure from the administration?
I don't think so. At the end of the day, I don't think he bent. In fact, if you look at the committee, there was one dissenting vote. The entire committee.
Stephen Myron.
Yeah.
Right, yeah. New guy.
Yeah, the new guy. The entire committee voted for this cut, and there was one dissenter. It's funny, in the meeting prior to this, there were more dissenters than there were in this meeting. So it actually looks like the chair has brought the committee together, is more cohesive. They've got a methodical plan that they're on right now of this slow but steady potential cutting cycle.
How worried are you that we do see a deeper economic downturn at the same time the Fed is cutting rates?
There's always the potential of a deep economic downturn. That's part of the economy. We have events that we don't see coming, and we always get caught off guard because we don't see them coming. So, we have these quote-unquote black swan events. If they were white swans, we'd know they were coming. Yeah. So look, we're always worried about events like that, and usually there's some cause that happens, some exogenous event that happens. As I sit here today, I don't see anything. But I would have given that same answer a month before a couple major financial crises, that the world looks good today, I don't see anything. And after these events happen, they look pretty obvious. To me right now, we're in an environment where the equity market's at record highs, credit spreads are all-time tights. Look, the dollar's weakening pretty considerably, but nothing looks too out of line right now.
You're a plugged-in guy. Do you think we get a Fed chair announcement before year end, and who do you think gets his job?
Oh, I have no idea when it gets announced. I really don't.
Is there someone you think that would be best suited to get this job?
No, look, I think the president has a good list of candidates. There's some people that are very, very qualified, very highly qualified, and I think we'd be lucky to have them.
You know, of course, we were talking about a little bit about tech off camera. This is an interesting time for tech. We saw the NVIDIA, Intel news. Is this a good thing to see these tie-ups like this?
Well, there's some good in this, always. Look, the United States, as we know, has to become a chip manufacturer. We cannot be dependent on the rest of the world for chips. Look, we came out of COVID understanding the supply chain better than we ever did before. We understood that without chips being imported to the United States, our economy, our manufacturing economy, shut down. You literally could not buy most of the things that we want in this country. Even simple things as toasters today somehow have to have chips.
Well, you got to connect to your phone, Gary. I need to know when my toast is done.
I guess you have to hit your phone in bed to put the toast down in the morning.
Yes.
So you can do that. So look, we now are in an economy where everything we buy has a chip in it. We can't be beholden to the rest of the world. So to the extent that the federal government is getting involved in encouraging chip manufacturing in the United States, and this started in the last administration with the CHIPS Act, and we continue to press on this independence of vital necessity goods in this country, I do think is a good thing.
Do you view it as the administration picking winners and losers?
I hope the administration's not picking winners and losers. It's not their job to pick winners and losers. What it is the federal government's job is to protect the citizens, protect our safety, protect our well-being, and we know that chips are a vital part of protecting our country. You know, simple missiles today have 300 plus chips in them. So to be able to defend ourselves, to be able to build military equipment, we need to be in the chip manufacturing business here. So that I do applaud, that we understand the risk of not having chip manufacturing in the United States.
IBM investing just billions of dollars in AI and its own infrastructure. Where do you think we are in the AI CapEx build-out?
You know, look, the AI CapEx build is pretty transparent. There's an enormous amount of money being spent in data centers. These data centers will come on sort of over the next 3 to 4 to 5 years. You will continue to see more and more use of AI. What's going on right now is, you know, people are using AI, but they're using sort of independent software, independent programs to solve a specific AI problem.
Like an agent.
Yeah, like an agent. So
do my payroll.
Oh, do my payroll. Handle my HR. Read my documents. Help me with my tax return. Help me with my tax returns. Where I believe this is going, where IBM believes this is going to an enterprise-wide solution, where all of these AI programs, these AI facilities will work together. They'll be more coherently, more cohesively related, and they'll have a big infrastructure behind that. And look, that's going to lead us into a really interesting world as people get their data and databases in a more coherent place, and that's what it takes to make AI work. It's going to lead us into a quantum revolution. We think by the end of this decade, we're going to have quantum, you know, be a major part of this equation.
Where can I get one of those toasters? IBM doesn't sell those, right?
No, they don't. But we probably wrote some of the software inside.
All right, well, that's true. Gary Cohn, good to see you. I'll see you at Davos, man.
I'll see you there.
All right, coming up, Julie Hyman has you covered on markets catalysts. She'll be diving more into this big news today between NVIDIA spending $5 million to invest in ailing Intel. Mohamed Al-Arian also in the Yahoo Finance house. Looking forward to hearing from Mohamed. We'll be right back.